Bonjour, bon matin. My friends, as you all know, I'm a fighter. Every bone in my body has told me to flee, fight, because I care deeply about this listing. And despite my best efforts, this listing has been paralyzed for months after what has been the longest listing period by a no-name brokerage in Canadian history. That's why this morning I advised the MLS department that we need a new listing agency. They have granted this request, and this house will now be prorogued until March 24th. I intend to resign as team leader, as the prime listing agent, after the sellers select their new agent through a robust, nationwide, competitive process. All right, hello, welcome back. Thanks for tuning in this week. Now, I wanted to do a quick follow-up on that voicemail I got last week. The caller ended up calling me back and leaving another voicemail, and I'm not going to play it, but it pretty much said that him and his wife were watching my video last week, and they saw or heard his voice, and they were dying laughing that I played it, and they thought it was hilarious. Anyway, so I ended up calling him back, and we had a great conversation for over an hour. We talked about many things, politics, the economy, the markets, the real estate market. He's in Vancouver, and we talked about that and all the corruption out there and all the money that has come in from overseas and from whatever case may be. But yeah, it was a really good conversation, a really good guy actually. So I just thought I'd share that with you. But that brings us into our first and second news story of the week here. So this was posted by Johnny Vindicated, and it's global news story here. CRA studies from 1996 found migrants bought BC luxury homes despite having low incomes. The tax evasion by Chinese, he says. A study conducted by the Canada Revenue Agency in 1996 and finally released 25 years later found a majority of homes bought in Burnaby and Coquitlam were purchased by rich immigrants who were declaring minimal global incomes, possibly laying the foundation for Vancouver's current housing crisis. The documents were first obtained by South China Morning Post reporter Ian Young, who noted that long-term Canadians who were making luxury homes within the same price bracket were declaring incomes 16 times higher. Young said he was shocked by the number of purchasers who had incomes that would be typically in line with those of refugees. One of the biggest shocking things to me was the average incomes that were being declared by these millionaire migrants who were buying these multi-million-dollar homes. Anyway, link is in the description. You can read the rest of the article, but it seems pretty interesting. And here's another news article. The same day, actually, this guy posted it, Johnny Vindicated again. Chinese Canadians admit to massive tax fraud. And that was from VancouverisAwesome.com. Let's check out the article here real quick. Richmond's couple's divorce reveals admission of tax fraud, mortgage fraud, perjury, and kickbacks. The case highlights issues like Richmond's low household income and tax evasion in the city's cash-only restaurant scene. Again, link is in the description, but it gets into this crazy story about these people who were like making millions and declaring $60,000 a year in income and, of course, owning all this property. This next post I found pretty interesting here. This is from David Coletto. He is actually the CEO of Lease Data, I believe, and this is what he's found when he was collecting data. 40% of Canadians aged 18 to 29 believe it should be illegal to own more than one home in Canada. 24% of older Canadians feel the same way. Among those who believe this, vote intention is 39% conservative, 23% liberal, and 21% NDP. This comes from the latest data set I used to write this. And this isn't the data for that, but this is the data set he was collecting when he found these interesting stats. Which begs the question, and let me know in the comments, do you feel or believe that it should be illegal for people to own more than one home in Canada, given our current situation? And from Mortimer, the Bank of Canada right now. Crash the real estate market, crash the Canadian dollar. And there they are sweating. Yeah, it seems pretty accurate to me. And lastly, a few posts about the rental market in Canada right now and how year-over-year rents are declining. I actually have some data to back this up in just a second, but yeah, let's check these out here from David Foch, or Daniel Foch, sorry, I should say. Rents now falling for 2 months in a row in Canada. And this is from rentals.ca and Urban Nation, their data there, and they do track rent. Of course, lots of listings make it on their sites there. And you can see those are the month over month, or sort of the year over year for a given month's increases or decreases. In October and November last year, 2024, both showed declines, which is the first declines in a while. But again, I have some really interesting data from the Toronto Real Estate Board in a minute on that. And the Liberal Party here, let's see what the Liberal Party, I don't know what they're doing lately, but anyway, that's real progress to solve the housing crisis. There are more than 200,000 short-term rentals across the country, like Airbnbs and VRBOs, that could be turned into housing. So we're giving cities more resources to crack down on those rentals and unlock more homes for Canadians. So I don't know if this is going to happen now, since we don't have a government that's functioning, but they are coming. The federal government, not just the municipalities now. It used to be the municipalities in some provinces. They're coming after those short-term rentals now. They know that they're tying up inventory, and they got something planned. Well, I don't think it's going to happen now, but they had something planned since they can't build any homes. So they're going to unlock your Airbnbs and VRBOs. Let me know what you think. Do you think that Airbnbs and VRBOs are a problem, that people are buying up properties to turn them into these? And of course, breaching a lot of these municipal bylaws and whatnot, and provincial in some cases. But even, like I said, the provinces and the cities are cracking down on these things right now. I think it's too little too late there, because I don't think they're going to be able to pass any new laws for the first half of this year anyway. And next, from Better Dwelling, Toronto mortgage delinquency rate hits a 9-year high. This is not about rentals, but I'll get into that also in a second. So that's just looking at Toronto. I have the national data coming up. And from Steve Saretsky, it's always been about supply and demand for housing. Today, the supply of new immigrants is dropping to zero, with the supply of new rental housing under construction at record highs. Rents will drop further in 2025. So we're seeing a lot of these realtors, and not just these guys, lots of people talking about how rents are dropping, and they're predicting rents to drop, and this rental bull market is over. So, you can't just plan on buying houses and rents going up in the future now. You have to plan on rents staying the same or going down, and they are going down, but we're going to get into that data right now. Okay, so this is from the Toronto Real Estate Board, this data. This is all areas and all residential property types, so condos, freeholds, townhouses, detached, everything included here. I did separate them, but there wasn't a big difference, so we're going to keep it combined this week. And these are the year-over-year rent decreases. And look, like there was no decreases year over year for the last 5 years, except in 2024 and the second half of 2024. So now, of course, Toronto, the last data we saw with those 2 months for October, November was national data from rentals.ca. This is pretty much provincial data. But Toronto Real Estate Board has more than half the agents in the country and more than half the listings. So this is very representative. And again, the most populated urban centers in Canada are in this data. So yeah, look at the second half of the year. Every month, the year-over-year rent has declined, and one of the months, April there, in the first half of the year, and there was none in any previous year. I would have circled them. So yeah, we're seeing this trend now where rents are declining, and again, it's from the supply of rental properties. So here is the Toronto Real Estate Board, same all listing types, or all residential listing types, all areas that they cover. So not just GTA, there's a lot of areas outside of the GTA included in this data. So this is the median rent price. Now, I didn't use average. I always like to use average when I can, but the average, when you get back to like 2016 and stuff, there was like big spikes, because a lot of times people were just renting high-end listings, 10 years ago as opposed to now. So we wanted something more of a smooth data to look at here. So yeah, you can see it peaked there in 2023 or so, but I can go on to the next slide here. So this is the median rent price compared to the median sale price. Let's get my head out of the way there. And the red is the sales price, and this is again is median, not average, and the rent price. And you can see, look, it goes up, right? Prices go up, sale prices go up, and the rent goes up. And the rent looks like it lags there. And if you look back to like 2018 and stuff and those things, it looks like the red is making the move first, like prices go up and then rents go up after, or prices go down. But it's hard to say. But it is a lagging indicator I see with prices. Rent lags prices, but look at this next chart here. So this is the same data as this, but we'll move on to the next chart, and I've moved it back 18 months. So right at the top there, rent price moved back 18 months. So the sale price is still the same, but the rent price I've moved back 18 months. So it really does look like the rent price lags the housing prices by about 18 months or so. So yeah, you can kind of predict what's going to happen with the rent prices. So house prices came down, rent prices are going to come down next, right? All right, now we're going to look at the raw data here from the Toronto Real Estate Board on the number of new listings and the number of sales or leases. This first one's the leases. I do have the sale info here to compare in a minute. So we have the number of new listings for leases in the blue and the number of leases or sales, they call them still, in the green. And yeah, you can kind of see, if you look back at, say, 2015, you can see they're pretty close, like 50,000 and 75,000 or whatever. But then you get to 2024, and that widens that gap. But let's look here. So I do have a listing to sale ratio, or listing to lease ratio, lease to new listing ratio, I guess the proper term is. So this is for every 100 new listings, how many are actually getting leased out. And yeah, when you look here at 2024, it's 62.1%, a lot higher than it would be with the sales data. But it's the lowest besides 2020. And of course, 2020 with the pandemic, nobody was leasing or moving for a few months there. So that really affected that in this data. But get out of that 2020, or if you take that out of it, there is no other year where it has been as low as 2024. So it just goes to show you we have a lot of inventory out there. And I talk about this all the time. This is no surprise. But there's a lot of inventory for leases right now. And it looked like it peaked there in 2021. It actually peaked in 2018 also. But in 2021 this time around, and it's been declining, 2022 a little bit lower, and then it's consistently been declining. It's like 10% less than it was in 2021 in 2024. Now let's look at that sale data. So this is the sales to new listings ratio, right? So this is, I'm getting confused talking about leasing. Usually we're talking about sales. So this is the sales here, and you can see, look at that gap. Let me get my head out of the way here. So in 2015, you know, that was it was actually a decent gap still, but it really tightened up there as you get to 2021, right? Very little between the two colors there. And now look at it. We have a little bit more sales than last year, than 2023, but we have way more listings than we had in 2023. So a huge gap there. So let's look at the ratios here and look at it. 42.7% for all of 2024. Again, this is all of the Toronto Real Estate Board, all areas, all residential property types. So tons of data in here. And it's the lowest it's been out of the 10 years that's provided in this data here, 42.7%. The next lowest would be 2023. And then you'd have to go back. Oh, yeah, look, it's been terrible. So all-time lows pretty much. If you look at per capita, it's going to be all-time lows, but just devastating data. So this is why I'm telling you, get out while you still can. You think that prices, and you know, I'm not trying to create FOMO of getting out, but there's all this talk, and I hear it all the times with sellers. You know, I'm going to wait until the spring, and things are going to pick back up, and you're waiting on this false profit to come along, this false market that you believe is going to come at some point, and the data is not supporting it. It's getting worse, right? These ratios are declining and things are slow. Like, it's not just going to pick back up. And we've been told all these things. Well, the immigration and the interest rates, well, nothing's worked. And again, looking at my data, looking at historical trends, I don't expect it to. But again, you hear a lot of narratives out there. Get out, sell that property, and I'm not talking about selling your primary residence and whatever else just to make a buck here. No, if you have that rental, if you have that extra property, just take your losses, cut it. It's not going to happen. It's not going to rebound, and it's going to be worth $200,000 more in 6 months or next year or whatever the case may be. So do whatever you have to do. Take advantage. Hopefully the spring market for those sellers is decent enough, and it's not going to be a catastrophic spring market. Maybe we will have a little bit of an uptick, rising prices like we always do in the spring, but take advantage of it and unload that property while you still can. Get out while you still can, and that's my advice for anyone hanging on to excess property. Okay, now we're going to move into the national data. That was of course, the Toronto Real Estate Board. So I have most areas here. Some of the areas like the East Coast and Saskatchewan, they didn't have their numbers reported before today, but I got most of the big populated areas in here. So these are the month-over-month price changes from November to December, last month of the year, and the average MLS price here. So Halton region, they're down 12.3% month over month. That's a big decrease, but they have big price swings in Halton, Oakville and stuff. They have big price points, so they see the big swings. Kingston and area down 8%. Guelph down 7.1% month over month. Toronto down 5.6% month over month. Montreal down 3.4%. They were at their all-time high this year. Peel down 2.9% month over month. Ottawa down 2.4% month over month. There'll be a lot of people moving out of Ottawa soon by the sounds of it. Province of Quebec down 2.2%. Calgary down 1.8%. York region down 1.6%. Hamilton down 0.5%. Greater Vancouver next to nothing, 0.2% down. Niagara region pretty even there. Edmonton down 0. It's break even, sorry. Windsor, Essex up 0.2%. Waterloo region up almost 1%. Durham region up 1.6%. London area up 1.8% month over month. Fraser Valley up 1.9%. Chilliwack and District up 2.2%. Victoria up 2.3%. Barrie and Simcoe up 4.3%. And Peterborough up 7.2% month over month. Let's look at those changes from the peak of the market here. Peterborough down 26.2%. They're leading the pack here. Niagara region down 26% from the peak. Durham region, they're usually up at the top, down 26%. Waterloo region down almost 26%. So yeah, some pretty big losses still at the top there. Guelph down 25%, Peel down 25%, Halton almost 25% from the peak, Kingston and area down 24%, Hamilton area down 23 and a bit, London area down 22%, Barrie and District down 19, Windsor, Essex down almost 19, Fraser Valley down 18, York region down 18%, Toronto down almost 18%, Ottawa down 16% from their peak, Chilliwack and District down 13.2%, Victoria down 11.7%, Greater Vancouver only 5.5%. Not a lot of loss there. Lots of that, fraud and stuff going on there since 1996. So of course things are propped up there. I just don't know how they keep it propped up or who's actually these new entrants into this market for millions of dollars. But anyway, there's a big world out there, and I'm guessing a lot of people have a lot of money or means to get it. Calgary down 2.9%, Montreal down 1.7%, Edmonton down 1.1%, and province of Quebec down just 0.6%. Again, they did have their all-time high this year also, so not a big loss there. Let's look at this in dollar figures. Halton region leads the losses there, down 380 grand. That's almost 400,000. You could buy a house like a lot of places. All these top places, you could buy a house in Saskatchewan or New Brunswick or a lot of places in Canada. Even Edmonton in certain parts, you could buy a house or a townhouse for that price. Peel region down 335. Durham region down $319,000. York down 283,000. That's like a garage up there or something. Guelph down 280 grand, Waterloo down 268,000, Niagara region down 240,000. That's a lot of people for people in Niagara region. I just sold a condo for 280 grand, so that's almost a condo there. Hamilton down $239,000, Fraser Valley down 236,000, Peterborough down 231, Toronto down 222. Barrie and Simcoe down 196 grand, London area down 185, Kingston and area down 177,000, Windsor, Essex down 135, Victoria down 128, Ottawa down 127,000. That's only like half an MP salary there. Chilliwack and District down 119 grand. Greater Vancouver down 74 grand, which is nothing. I always say the same thing. That's nothing for those guys out there. It's like one trip to the casino. And Calgary down 18 grand. Montreal down 11 grand. Edmonton only 5 grand from their peak. Province of Quebec only 3,000 from their peak. So yeah, we got some big losses and some not so big losses there at the end. And lastly, we have an update on the mortgage arrears. Not enough to update my home buying recipe. When it gets to 0.23%, right now it's at 0.21, the latest data from October. This is a lagging indicator or lagging data set because it needs to be 60 days plus in arrears. but it has spiked over that 0.2%, so it's at 0.21%, and it's trending up. And I'd like to know where it is right now, as in December, with that unemployment. But of course, we don't know because people need to, they have that chance to pay their mortgage, obviously. But once it gets to that 0.23, which is the bottom of the previous low, I will update that home buying recipe to give that another bar there. And like I said, this I think last week or the week before, once it starts to go, it just shoots up, right? This is not going to be a long drawn out thing once it does start to take off. But we're going to keep an eye on this, and they're usually pretty good at updating it near the beginning of every month. So to finish off, I think I'll just say, it's going to be a very interesting year in spring. I don't know, usually the spring has increased prices. We see the same thing every year. But right now we have no functioning government. We have everything that's coming to a head of when it should be, with all these historical trends and unemployment and all these things, interest rates coming down. So there's a lot of pressures out there in the system, and I think the wild card will be that non-functioning government. What's going to happen with the U.S.? What's going to happen with those tariffs? Is Trump just going to make an example of Trudeau and the Canadian government for being not operational and slap tariffs? And that could just be catastrophic. So a lot of pressures right now, and I just don't see financial prosperity, I guess, for Canada in 2025. Again, it does play in with the kind of forecast I have for this year with where the real estate market is going to go. Anyway, let me know what you think in the comments as always, and until next time, I'll see you then.